Hello everyone, I'm your host Daniel Litwin, the voice of B2B, and you're watching MarketScale's live Retail Industry Roundtable. Thank you so much for joining us. We really appreciate you watching along for our first Retail Roundtable. So with every roundtable we're going to be doing, our plan is to bring on a varied panel of experts and thought leaders to give their hottest, their coldest, and most insightful takes on a select retail topic. So this time for our topic, we're exploring the brick and mortar strategy for 2021. After a year of retail business closures, bankruptcies, consolidation, massive layoffs, but also operational and technological innovation, retail's whole physical presence is definitely in a transition period. So we're hoping to pose the questions today: where will it be most useful, powerful, and innovative for the larger retail strategy moving forward, and why? So I'm super pleased to welcome our four guests for today. Going down the line, we've got Carol Speakerman, president of Speakerman Retail and host of MarketScale's Speakerman Speaks Retail. We've got Adrian Thomas, president and CEO of Datascan. We've got Kyle Freeman, VP of Customer Success with Vixo. And last but not least, Kevin Coop, content guy for morningnewsbeat.com. Welcome to everyone. Real pleasure to have all of your insights today. We'll get to your insights here in just 1 second. I want to tease real quick. At the end of the broadcast, we're going to be announcing the winner of a brand new Apple Watch from our pool of registrants. So if you're watching live, make sure you stay till the end, and you might have something fresh on your wrist here to show off at the office. So all right, team, let's get into it. Again, we've got Carol, Adrian, Kyle, and Kevin joining us. I want to open up our roundtable today with a simple question, just to get everyone's take and get a feel for where everyone is at with this. So I want a quick answer here, and then feel free to debate amongst yourselves based on how you answer. Here's the main question. Is the brick and mortar retail space going to be more essential or less essential to retailers going into 2021? Let's hear it. Jump in. Who wants to bite first?
Compared to what?
Compared to, I would say, the previous year, right? So we saw a lot of trends before COVID hit that were already evolving the brick and mortar landscape, right? A lot of experience-led things, a lot of e-commerce integrations, and we'll get more into that. But with all of that in mind, then obviously the COVID shift, what are your thoughts? You think it's going to be still an emphasis in the strategy moving into 2021, or has COVID permanently shifted us away from caring about brick and mortar at all? I know it's a bit dramatic, but.
Well, I'll say that stores are not going to be important. They're going to be critical, and especially critical to retailers' digital strategies.
I would agree. I think they're going to be reimagined, and we'll probably get into some of that discussion later on. But it may not be the same use of the space. It will be a different use of the space. They're absolutely critical to the retail supply chain.
Yeah, I definitely think that the strategy for stores will be much different. So whether it's right sizing of store fleets, probably going to happen, but square footage reduction, shared spaces, co-ops, things like that could also, as well as increasing distribution points for buy online, pick up in store, which I think we're going to talk about a little bit later. But I agree. I think that's even more essential.
Yep, absolutely.
All right. Well, okay. I'm willing to be the skunk at the garden party.
Here we go.
But in this case, specifically because you referenced 2021, because I don't think we have any idea. I think that there's a lot of variables, one of which is the variance, right? So we have no idea how 2021 is going to play out. I mean, there's been all these variants. We have no idea how the nation's disease state is going to go forward. We don't really know when stores and restaurants and things like that are going to start to reopen. We could go through a period of time where, in fact, stores get closed down again, and we have a whole nother series of bankruptcies, and we have a whole nother series of chains closing down. So I don't think we have any clue whether or not physical stores are going to be more essential in this year or not. That said, I hope all of what you guys said is true. I am just not persuaded because I just think Bob Murphy, the old play-by-play guy for the New York Mets, used to say when the Mets were facing, a bad time, which was frequently, that they were facing 9 miles of bad road, and I think we have at least 9 miles of bad road ahead of us.
Yeah,
But
Kevin, I think
stores are already essential, though. I mean, it's they're not in total lockdown, and retailers are already, look at what retailers like Walmart being really aggressive in terms of turning their stores into digital assets and no longer looking at them as liabilities. So that train's already left the station, and I certainly don't see it going backward. And there's a real potential for it to even accelerate, and particularly when stores right now are so critical to the convenience proposition. I mean, we know now that shoppers think convenience is even more important than price. And we also know that Amazon, despite their best efforts, has not redefined convenience as just being a purely digital experience. So stores already, I think, are very much in the game. As Adrian said, they're being repurposed, they're going to be redefined. But I certainly don't see their importance diminishing in any way in 2021.
Well, okay, some stores, I'll give you that. Some stores are, but I don't think you can make a blanket statement and say that stores are more essential now than ever or more critical now than ever. I think there's
Tell that to dollar stores. Tell that to dollar stores opening tens of thousands of locations.
Oh no! Again, I'm clarifying it. I don't think you can say that all stores. That's the concept of the physical store, which is sort of how the question was positioned, says that they are more essential than ever, or they're going to be more essential or more critical in your phrase.
Sure.
I'm saying there will be some stores and there will be some companies that will make themselves more essential. But I will also argue that there are a lot of stores out there who are dead stores walking, and they don't even know they're dead yet. There are some stores out there that had, especially let's say in the supermarket segment, where they had the best year of their lives in 2020. I mean, not the easiest year of their lives, but they had their best year of their lives because all they had to do was bring merchandise in the back door when they could get it, open the front door, and the stuff flew out. They didn't have to do promotions. They didn't have to do sales. Man, it was like, and they had great quarters. They think they're like the guy who wakes up on third base and thinks he hit a triple, right? And he didn't. And if those guys don't figure out how to make themselves essential, and there's a lot of stores and a lot of segments that I would put into that bucket. If they don't figure out how to do that, they are not going to be nearly as essential or critical as they may think they are. So it is an evolving market, and I think there's a lot we don't know. But I think to say that stores, quote unquote, are more critical or more essential going forward, I don't think that's true at all. Frankly, I've gone to damn few stores since February 26th, and I haven't missed the experience. I'm perfectly happy to survive the way I am.
Yeah, I've been in quite a few physical stores. I think for me, if you say, when you think about essential, we're not talking about essential in the same capacity. I think that there's going to be a reinvention of the store space. So, but those spaces are going to be a necessity. So whether they turn into distribution points or buy online, pick up curbside, I think retailers weren't ready. And I think they're more ready now than they were when the pandemic hit, and have even enhanced all of their e-commerce abilities to be able to catch up with the need. So I think that if you're thinking about, Kevin, essential in the same capacity, I definitely agree. I don't think that, but I think they're going to leverage their existing assets and spaces to definitely build upon.
Yeah, I'm gonna cut y'all off. We've got so much more to get to. I'll let y'all speak again here. I clearly touched on the hot stuff early, posing some good early questions there. Props to me. All right. So
I'm just an ordinary guy. That's all.
Yeah. Right. Exactly. Right. So one of the highest profile trends that was already shaping retail pre-pandemic, and that I think was advanced in a lot of ways, but also held back by the pandemic, was this idea of emphasizing the experience, right, and making the physical space an extension of an experiential strategy. So some examples that come to mind are integration of technology, like AR-powered shopping experience, or the rethinking of big box space for more small personalized experiences, like Toys R Us did, for example, although they did just close their 2 stores that were attempting to do that. We might get into that in a little bit.
Maybe not the one you want to use as your best example.
Oof, all right, maybe should have updated the script there. And then other attractions that are big, high-profile ones.
You're going to bring up GameStop, you know.
Yes, right. Yeah, I got to be careful on the examples nowadays. Things change so quickly. Okay, another big example. Flagship stores have been increasing their attractions as well, right? Like Nike's main New York store, and then also converting more basic processes to be more experiential, like COVID transitions to curbside pickup, touchless payments. Even converting physical stores into online shopping return locations, like Amazon placing return stations within Kohl's. So those are all just some various examples to get your wheels turning. But the real question I want to ask here is, what have been some of your favorite examples of brick and mortars emphasizing that experience as part of their core goal? And how have you seen that shift because of COVID, for the better or potentially for the worse?
Well, I think I'm going to agree with Kevin on this one. I go back to the first question. I don't see tremendous experiential changes happening in the bulk of retail in 2021. And what I mean by that is I don't see the level of investment that retailers are going to be willing to make in that pure experiential sort of focus for 2021, because we're all still going to be wearing masks, as Kevin was saying. There's going to be a reluctance to go back to physical brick and mortar through at least the summer. So I don't know that there's going to be a significant shift in experiential if you're going to put, fitness studios or, Prosecco bars or jazz bands or whatever you're going to do in terms of trying to get people into the stores. I'm not sure that's going to happen, certainly in the first half of 2021. There's going to be other things that retailers will invest their capital in, I believe.
I see retailers, though, making tremendous investments right now in anticipation of potential pent-up demand going into third and fourth quarter of next year. Kevin's right. You can't predict everything, but you also can't sit on your hands, because you don't know, for fear of the unknown. So I do see the investments happening now. Now is the time to work out the bugs for a lot of these experiments. And I think that, augmented reality, artificial intelligence, virtual reality, those are really going to take hold in brick and mortar going into next year. And, you look at retailers too, like Restoration Hardware, or they like to be called RH now. But talk about zigging while everyone else is zagging. They're opening these massive, spare no expense, lavish flagships. Their sales are up 25% this year, which is pretty impressive, or year to year, which is pretty impressive given the climate. Yes, they're in a good category, home furnishings, and which has done really well, but super high-end, expensive products, flagship experience, wine bars, restaurants in these locations. And they're not slowing down. They're buying a bunch of real estate in Aspen in order to become a multi-business model lifestyle brand. So to me, that's one of many examples of retailers having extreme confidence in boldly experimenting in anticipation of better times to come in 2021.
Yeah, they're definitely getting more prepared. I know that in folks that I've interacted with, the reallocation of capital in 2020 to be ready in 2021. So where they might have had slated projects or capital investments in their facilities, they shifted to some of the technology needs to be able to get them ready for 21. So I think that I agree with Carol. I think that nobody's sitting on their hands. I think they're more than getting ready, to be able to, get back to normal when it comes.
Yeah.
Adrian, I'm curious your thoughts on this. Do you think that the I guess what encompasses experiential retail will look the same, especially as retailers also focus on creating a seamless omni-channel experience that makes the digital experience just as unique and enjoyable. Basically, will the vision of how can we focus our experience as part of the core goal of what we're doing change from having to be so focused on just the brick and mortar and be more of an omni-channel? How can we make everything feel personalized or experiential? Thoughts there?
I think that's for me. That's depends on the vertical channel that you're in. So grocery, for instance, I think they were caught napping with the sort of growth of curbside and the growth of delivery. And they're going to have to reinvent some of the space within the store to be able to better handle what I think will be, in my opinion, will be a continued growth and acceptance of curbside pickup. So you're looking at sort of robotic, the investment in robotics for picking, et cetera, but that's only in grocery. I think in specialty retail and apparel, then yes, omni-channel, what we saw a dramatic shift pre-COVID from, buy online, ship to your home to buy online, pick up in store. And I think, there's a clear economic driver to that, is it's expensive with all of this shipping. And I think that will continue. Retailers will want to drive traffic through their stores. They want to use them as distribution points as well. And I think the challenge, the later challenge, and I don't know if you've studied some of the numbers on this, is how do they handle the tremendous volume of returns that is created by this, the omni-channel sort of tsunami that we're experiencing? And that's a big challenge that I'm not sure retail's cracked yet.
Yeah. Kyle, I'm actually curious your thoughts on that. Since Vixo focuses so much on proper facilities management and making sure that the brick and mortar space is adapting to all of these shifting needs, how have you seen some of the folks that you work with take on that logistics and operational challenge of dealing with e-commerce in a brick and mortar environment?
Yeah, so we've definitely seen an increase in buy online, pick up in store stations. So as Adrian was mentioning, that's definitely going to. Some retailers are behind. Some of them were probably testing the waters a little bit, and some were ready. But we're definitely seeing investments there, as well as in the just the health and safety space. A lot of upgrades to higher filter ratings to reduce the airborne pathogens that are in the stores. So, for me, I think it's going to be interesting to see how that operating expense impacts their overall operational income. In 2021, they're going to have to make some adjustments. They're going to be spending money on things that they didn't spend money on that before. So, I think that's also going to be a bogey for a lot of retailers as they figure out what that looks like long term.
All right, y'all, I'm jumping over to...
Can I have a shot at that?
Kevin, yes, jump in, please.
I figured I caused so much trouble on the first question. You didn't want to...
Yeah, right.
Listen, I think that the interesting thing, and especially in the grocery space, which is what I write mostly about, is they had an interesting 2020 in the sense that a lot of them innovated during 2020 because they had to. And they never thought about it as innovation. They thought about it as survival. So companies that were not doing things like click and collect, companies that were not doing things like delivery, focused on those things. And I think the smart ones learned that that innovation doesn't have to be a major, thing where you have a committee and they have 6 months to come back with a plan and then you vote and, that they just had to do stuff. And I think if they've learned that lesson, that's a good thing. But when you talk about experiential, to me, the store that I keep holding up as an example of one that just absolutely killed it during the pandemic and continues to, is a supermarket in Connecticut. They have a couple in New York called Stu Leonard's. And the great thing about Stu Leonard's is, first of all, it was always an experiential experience. It always had a directed traffic flow. So they didn't even have to put arrows on the floor like a lot of supermarkets. That was always experiential, and mostly because they had the entertainment they were able to continue to do. They couldn't do sampling because that you couldn't do that. But they did it in such a way that they only have like 1,200 SKUs. The average supermarket has 40,000. So by narrowing down their supply chain and having direct relationships with their suppliers, they were actually able to be always in stock when a lot of their competitors were not, and therefore were really, really successful. But it was always an experience, and they lost as little of that as possible. And I think that, I think you're going to see other retailers do that. And, one company that comes to mind, not in the supermarket area. I mean, think about Nordstrom. To me, the most interesting thing that Nordstrom has done, and they started it before the pandemic, is the whole notion of the Nordstrom Local, where basically they create these small stores where where you can try things on, you can have them altered. Maybe you pick up stuff you ordered online. There are Nordstroms near me that are like mausoleums at this point, but Nordstrom Local stores have the ability to deal with that situation. And that's a great example of what you guys were talking about before, rethinking what the relationship is with the shopper.
Right.
Agreed.
And I'm just making one more, shame on me that I didn't jump on this when you gave me the softball there, Daniel, but one key thing for sort of true omni-channel success, depending on how it actually pans out for each individual retailer, will be inventory accuracy. They absolutely will have to have, much more frequent validation of their inventory quantities in the stores, not only to be able to handle foot traffic, but also to be able to handle, buy online, pick up in store, or buy online and ship from store.
Mm-hmm.
All right, team, I'm going to jump over to something else now. We've been talking a little bit about e-commerce already. I want to focus a little more clearly on the relationship between e-commerce and brick and mortar moving into 2021. So I'm going to lay out a lot of context for you to put into perspective how e-commerce has shifted in the last year. So the data is clear. Customers flock to online shopping in huge numbers, at least out of necessity during the pandemic. Some research out of eMarketer and Insider Intelligence shows e-commerce sales grew 20.2% in 2019 and then 27.6% in 2020. Yet they predict that in 2021 and over the next few years, while e-commerce will continue to grow, its pace will significantly slow down, with percent of change diminishing year over year. Now, if we look at that same trend globally, it's a different story. The ceiling is incredibly high in a lot of emerging economies, a lot of overexploited economies. Before COVID, many of these countries' large amount of or underbanked citizens, wide gaps in poverty, underdeveloped financial infrastructures meant e-commerce was slow to take hold. Mexico, for example, where fewer than half of adults have bank accounts and less than 5% of retails occurred online before the pandemic. When COVID hit, it pushed many businesses online, and we saw about 54% growth in web sales in Mexico. We've seen similar trends in major nations like Russia and India. So retail experts are kind of all over the place with whether this e-commerce growth will remain and how to strategize with it in the broader context of a retail strategy. So I'm curious y'all's thoughts. Maybe let's start with Carol here. What do you think these trends indicate about the role of e-commerce compared to brick and mortar in 2021's retail landscape? What sort of relationship and synergies should they be having?
Well, bricks and clicks are inextricably linked. I mean, it's getting harder and harder to even have conversations about them separately. Luckily, retailers are very aware of this now. They're changing organizationally. One of the big unsung moves made this year is that a lot of retailers broke those silos down between their online and offline businesses, and that's going to help accelerate the growth going into 2021. But old habits die hard. I think there is going to be a little bit of a swing back to brick and mortar. There's going to be some pent-up demand there. But it's not just the fact that platforms like Walmart and Amazon have democratized online shopping for millions of shoppers and made it very easy for them to get into the digital space. But it's also about the broadening of categories. The fact that folks that maybe were comfortable buying a couple of categories online are now comfortable buying a huge breadth of categories online. And I think that's going to drive a lot of the growth. It's just the category proposition and customers getting comfortable with buying more categories online, not needing that touch and feel so much. So I think e-commerce is going to continue to grow, and particularly for retailers that are still playing a game of catch up. It's going to be plus over nothing for some of those guys, and it's going to be maybe harder for the Walmarts of the world or the Amazons of the world to drive growth. You mentioned markets like Mexico, though. So I think it's important to talk about marketplaces and how online marketplaces are driving growth for brands and also for other retailers that partner with marketplaces. So in places like Mexico, where it's been challenging for individual retailers perhaps to play that game of catch up in the digital space, you've got platforms like Mercado Libre that are taking advantage of that and becoming the default platform for a lot of those folks. So these highly developed global online marketplaces, Alibaba, Amazon, Mercado Libre, they present an opportunity for a lot of these brands and retailers to get into the digital space without having to build it themselves. It's a concept I talk about a lot, buy, build, or bridge. And all three strategies are going to be at work in order to make all of this happen.
Thoughts from everyone else on that? Agree or disagree with Carol? Kevin, I know you've always got some thoughts.
You're on.
Kevin, you might be muted there. Anyone else have some thoughts real quick?
No.
No, not hearing you, good sir.
No, yeah,
all good.
I think the only thing I'll say is I don't see them disjointed. So when we talk about the e-commerce trend and where that's going to go, as well as the physical space, I do think that the entire omni-channel experience is connected. So it's really important to talk about the behaviors that Carol had made mention that were driven in 2020 that we're going to see in 2021. I mean, you saw online sales in some organizations comp up quarter over quarter at 300% really, really early. And so I still think that they're going to use, I think it's connected, and I want to make sure that it's not, I don't believe it to be separated.
Yeah.
Yeah, especially if we link it back to the sort of omni-channel discussion we were having earlier. It's going to be, I think, a focused approach from all fronts. And I think any player that does have both a physical and digital presence to sacrifice one over the other, probably not the smartest move because there are usually ways for both of them to synergize, like y'all said, work together. So next thing I want to touch on real quick is direct-to-consumer stores. So COVID saw bankruptcies of major retailers like JCPenney and Neiman Marcus, and store closures for brands like Macy's and Nordstrom's, which on one hand I think points to how COVID accelerated the decline of the department store and the mall model. But on the other hand, pre-COVID, many DTC, direct-to-consumer stores, had been expanding their brick-and-mortar presence, like Warby Parker, for example. They have over 100 stores. Casper, the mattress company, they plan to open 200 stores across North America. This trend did slow down a bit due to COVID, but if we look at some recent news, actually, Warby Parker Glasses store is still launching new stores in malls on top of that in areas like Connecticut and Maryland. So should we expect to still see direct-to-consumer stores expand into brick and mortar in 2021? Do you think there's value there in taking that digital native experience and expanding to an in-person one? What are your thoughts?
Well, there's certainly a lot of real estate available.
Yes.
It is.
Right. I mean, if they want to expand into a brick and mortar, there's lots of places, and landlords will probably give it to them cheap. So I mean, again, it's going to depend on how their numbers play out, I would imagine. I think the interesting thing, and this covers companies both across the board, it's going to be interesting, especially public companies, to see how they deal with their comps. Because if you're a public company and you had a great 2020 and suddenly you're looking at those comps for 2021, there's going to be a lot of pressure from investors to keep your numbers up. And sometimes keeping your numbers up means bringing your investment down. So there's going to be a lot of companies trying to figure out how to navigate that particular problem.
Yeah.
I think direct-to-consumer brands are actually going to fill a lot of the gaps that are going to be created as some of these these more legacy players either pare down their fleets or close, shutter entirely. We haven't seen the full story on the attrition that's going to happen just yet. But it's interesting that the examples that are always trotted out, JCPenney, et cetera, are in those discretionary categories that have had such a hard time during COVID. So one of the big opportunities going into 2021 in brick and mortar, bricks and clicks, is going to be to reignite those discretionary categories. And the best place for that to happen still is in stores. So I think direct-to-consumer brands that focus on discretionary categories are well poised. And also, too, digitally native brands can be much more selective. Their model is to selectively open stores as a way of bringing extra value to their proposition. They're already rooted in the digital space. They have those user bases. They know so much more about their customers usually than a legacy brick and mortar player will know. So they come into the brick and mortar space, with a lot of advantages just going in from day one. And they don't need to open thousands of stores in order to be successful. But I do think that old model of opening a store as sort of a vanity project or even as just a laboratory, those days are over. Going forward, when you open a store, you're going to want it to be profitable. And we look at brands like Bose that have learned that the hard way. They opened, a few hundred stores. They put a couple hundred or so stores, put a stake in the ground in brick and mortar and said, hey, man, these stores are not profitable. And so they've retreated from that strategy. So we're going to see some of that migration, but direct-to-consumer brands are very well poised for expansion in brick and mortar, I think.
Yeah, I think even if it's not on if they're not looking, to Kevin's point, if they're not looking for independent retail spaces, there's pop-up collaborations. They're going to look to curate, the experience for the customer inside of these spaces. So there's some examples out there of direct-to-consumer brands that are in larger retail environments, which benefit both brands. So I think you'll see a lot of creativeness with direct-to-consumer in 2021 and beyond.
Yeah.
Yeah, I think that the drivers that were, forcing these direct-to-consumer brands pre-COVID to think about a brick and mortar fleet, they haven't changed. And I think, we're now a year further on, and you mentioned Warby Parker. Warby Parker now has a national brand that people are fully aware of. They do, national TV ads, et cetera, et cetera. So the brand awareness is pretty high, I would expect, which would help support the opening of stores, of brick and mortar stores, to support the sort of distribution of their product into the marketplace.
Don't you think
Oh, I'm sorry. Go ahead.
No, you go. Yeah.
Well, I was just going to, dovetailing off of what Adrian said, I think the brand equity or the brand awareness is very important here, because I always say the big question to answer is, am I really a brand? And to honestly answer it, am I really a brand, or am I just a place that has brands? And I think some of these examples that we've been talking about, JCPenney, Macy's, whatever, at one point they may have been a brand, a destination, but they turned into places that have brands. And that ties into the Warby Parker story, because brands like Warby Parker are ubiquitous now. They're opening their own stores, they have wholesale relationships, they're doing strategic partnerships. So brands now have a lot of options, and they have permission to be in lots of places. And that brand ubiquity, by default, weakens the position of retailers that are just places that have brands, because everybody else has them. And those brands more than likely are starting to open their own stores or have some sort of direct-to-consumer connection. So I think there needs to be some soul searching with direct-to-consumer brands that are thinking of opening brick and mortar, but also with legacy players, whether they really are a brand and a destination, or, like I said, just a place that has brands.
I was going to say, don't you think that in the case of both the direct-to-consumer companies as well as you were talking about all the companies that have declared bankruptcy or closed stores or whatever, that the ones that are in trouble now are the ones that were in trouble before? I mean, I'm going to use the word, their business model was sort of corrupted, and I don't mean that in the legal sense, going into the pandemic. I mean, JCPenney and Sears and companies like that, they got problems, but it has nothing to do with the pandemic. Mm-hmm. And there are probably a bunch of direct-to-consumer places out there that had, a solid brand identity, had a solid value proposition, and a solid business model. And they can it seems to me that they can make their decisions and build on what's a solid foundation. But there are an awful lot of companies out there, both legacy companies and new companies and digital brands and, the whole shooting match, that that they're really not built on a solid foundation. So they're going to get in trouble. and I'm going to get a press release and say, well, it's because of the pandemic, which is nonsense.
All right, y'all, I'm going to pivot here real quick. We've actually got some questions from the comments real quick that I want to pose to the group. We've got a lot of content to get through still, so I'm going to try to keep it to one response per each of these questions. We'll start with John Maris from DFW. He asks, do you guys feel like the e-commerce bump we saw from COVID last year is going to continue into 2021, or will things normalize this year? We kind of touched on this a little bit earlier, but if y'all had to summarize that into one final take, what would you say?
I'll say yes, but it depends on how you define normal.
Love that. That's a good answer there. All right, next up we've got Mike Weiser from Dallas. He said the following, so would love y'all's thoughts on this. I expect a spike of in-store shopping due to pent-up demand, as Carol said, but it should level off at some point to pre-COVID levels. E-commerce is great and here to stay for sure, but increasing in-store traffic equals increasing impulse sales, and retailers understand that, I think. Do y'all agree or disagree with Mike?
Completely agree, and that's why you see so many retailers stretching into the grocery space, because grocery drives traffic. That was one of the more prescient moves that Target made, but pre-COVID was really doubling down on their grocery business. That kept the traffic flowing in to drive those higher margin categories that they've always been known for. So, yeah.
And then last question here, this is from Catherine in Dallas. She asks, is there a vertical in retail you think handled the rapid transformation well and really hit the ground running to make sure they were set up for success? Any thoughts? Maybe, let's see, Kyle, any thoughts there?
Yeah, I mean, if you're looking at verticals in retail, gosh, I think everybody was a little shocked, there up front, but if you think about categories in particular, I think the Michaels company did a really good job at ensuring that they were ready. Their new CEO, Ashley Buchanan, coming from Walmart, I think spent some time on getting them prepared early. And, a lot of the mask supplies and things like that people were buying made them an essential retailer right out of the gate. So I thought they did a really good job.
All right, team, I think we're going to jump into something a little more lighthearted. Thanks for everyone's insights so far. So we're going to take a break from the hard hitter stories, and we're going to play a little game that I like to call the retail ring. Let's make it happen, folks. So the concept is simple. We're going to show you two similar retail companies within, just a similar sphere of the market, and your job is going to be to guess which is projected to do better in 2021, and then I'll ask any of the folks who get it right or who disagree with the estimation to give a quick elevator pitch length insight on why they're projected to or not do well in 2021. And we based our matchups on estimated revenue for 2021 with stats from Yahoo Finance. So let's go ahead and cut to the first one, Target versus Walmart here. So which of these two major big box retailers do y'all four think is estimated to do better in 2021? Let's go down the line. Carol.
Oh, boy. Target's had a really great turnaround, but I have to give this one to Walmart.
Okay, going to Walmart. Let's see. Adrian, how about you?
I'm going to disagree. I think yes, Walmart's the big dog on the block, but I think Target has done a terrific job, and I think they'll do better in 2021.
Okay.
On a percentage basis, not on an absolute basis, obviously.
Right. All right, Kyle, thoughts?
Yeah, I agree with Adrian. I think that if you're thinking on a percentage basis in performance and growth, I would say Target.
Okay, Kevin, you're the final one.
You know how I feel about this.
I know.
I hate projections because I don't think they're worth all that much at this point. I think they're both going to do great. I think the losers are going to be anybody competing with them.
Okay, well, you both have a fair.
Honestly, I don't get the car, by the way. I'm pretty sure.
Yeah, right. Sorry. and the winners are here. Adrian and Kyle, you both got it right. Target has a 44.3% estimated growth for 2021. Walmart right now is at 13.4%. So both are estimated to grow. But to Kevin's point, it is a little hard to estimate exactly how they're going to do. For the folks that said Target, What is it about their strategy that you think sets them up a little better for growth than Walmart? Is it that they are expanding into markets Walmart maybe has already expanded to? Are they doing anything particularly fresh with their COVID response or their branding or marketing that's given them a boost? Adrian, thoughts from you?
I think Target is doing a great job with its branding, and I think they're also looking at the way they use their store footprint in a better way than Walmart does, and I think we're also going to see some smaller Target stores that going to be moving down into the sort of the neighborhood size the same way, similarly a little bit like Walmart has done. But I just think it's going to drive more traffic through their stores overall.
All right, let's go ahead and jump.
I have to say that really quickly. I can so see the Target answer. I mean, because Walmart is a more mature business, so if nothing else, Target has a lot more room for growth.
Right.
And I think they're on that growth trajectory. So I can certainly see that it's going to be harder for Walmart to achieve that same kind of growth because, again, a much more mature business, particularly online.
Right.
But I also think, just again, I'm being argumentative here. But think about it for a second. Walmart has also just announced that they're revamping their ad business, and their goal is to become a top 10 advertising agency in the next year or two. If they do that, I mean, whoever's making these, is Yahoo Finance factoring that into their numbers? I suspect not. If they're generating that kind of traffic and that kind of money by getting into new businesses, that could completely throw off those projections. So I think it's important to know. And here's the other question: is we don't know what businesses Walmart or Target will be in 6 months from now that they're not in today. We also don't know what businesses they may get out of in the next 6 months that they're in today. So there's a lot, it's really hard to make these projections.
And Kevin makes a great point. It is about diversification, and Walmart is inarguably the more diversified retailer, particularly diversifying into solutions and services. So yeah, it's a moving target. No pun intended.
Hey, I like that. That was a good one. Okay, next one, we're matching up Gap versus Levi. So we've got our two fashion brands here. Let's get some thoughts, team. This is a toughie. We love our jeans. We love the Gap. Which one is going to hold out into 2021? Let's start backwards now. Kevin, you get to lead. What are your thoughts?
Are we talking about Levi as a brand, or are we talking about it as a retail experience? Because they've got stores, but they've also selling through other places. I'll bet Levi.
Okay, betting Levi. Let's go Kyle now.
Same, Levi.
Okay, cool. Adrian.
Yeah, I'm going to go with Levi's as well.
Carol.
No contrarian here.
Levi. I love this. Well, guess what? You're all absolutely correct. Ding, 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 ding. I wish we had a sound effect for that one. Levi, okay, so this is interesting. They're both estimated to do poorly in 2021. So Levi is estimated to actually shrink about 89%. The Gap is expected to shrink 211%. So, yeah, Levi wins there by the skin of its teeth. But so thoughts there. Why did you all go Levi?
Or the mechanic is your question, is basically.
Yeah, I mean, so, okay, estimated growth, like you said, Kevin, it's a little hard to really nail down in any sort of material way. But you posed a question there if you thought about Levi as a brand or as a retail experience. Why is that factoring into your estimation for whether or not Levi is going to do well?
Well, because Levi, I actually had addresses something, and I actually totally agree with something Carol said earlier, which is, are you a company that sells other people's brands, or are you a brand yourself?
Right.
But the thing about Levi is, it seems to me that they have the advantage of both selling directly online, they do have stores. I don't know how they do, particularly in terms of the brick and mortar, but they're also selling through other places. There's a lot of places you can get Levi's. Gap is a lot more limited in terms of it sells only through its own stores and online. But I also think the advantage is that that Levi will have long term is it seems to me they have a broader audience, right? I mean, I walk into a Gap, there's nothing that's going to fit me, right? I walk into and I'm, that's maybe more information than you want to have. But the thing is, so they've got a much narrower niche than Levi does. Levi seems to have a broader palette on which to develop a strategy, which is just why I think Levi is better positioned long term.
All right, team. We've got one more matchup I want to get to because we've got some more content to get to. So let's do the last matchup. Nordstrom versus Macy's. So both, major mall retailers, both struggled in different ways during 2020. What are y'all's thoughts? Who do you think is estimated to grow or potentially shrink less? We'll start with, we'll flip it back around. Carol, you first.
Nordstrom.
Nordstrom. Okay. Adrian?
Yeah, absolutely Nordstrom.
Okay, Kyle.
Nordstrom.
And Kevin.
Nordstrom, no question.
Okay,
I
so
don't think the numbers say Nordstrom's going to do better than Macy's.
okay, now this is going to be fun. All of you got it wrong. So apparently, Nordstrom is supposed to shrink 237%, and Macy's is supposed to shrink 200% in 2021. Now, Yahoo Finance must have some bad insights here. Everyone disagrees with Yahoo Finance. Give us your thoughts. Why were y'all so sure that Nordstrom is the one that's going to do better than Macy's?
Well, it's what Kevin mentioned earlier about the diversification of their delivery model. The Nordstrom local stores are showing to be very well placed with distribution points, some of the services. I really feel like that they're being a lot more creative and really listening to the consumer around what they're looking for as it relates to really curating what that purchase looks like. I think the Nordstrom local is a great move.
I also think, Kevin, I know you made a comment earlier on that you never want to go into a physical store again, right? But I'm one of those guys that actually likes physical stores. And I think there's going to be certainly as we get back into being able to, come out of lockdown and get out and travel a little bit more, people like the Nordstrom customer service experience. And I think that, there's going to be a pent-up demand for people to go back and shop in a Nordstrom store because they like being treated in the way that Nordstrom has been, set up to treat people for years.
All right. Maybe I'm guilty of a little bit of hyperbole when I said that before.
I'll go back to my criteria though to justify the answer, which is Macy's has arguably morphed into becoming a place that has brands, and Nordstrom still is a brand, and I think that matters. Also, too, Macy's still has that stack it high and let it fly model, and just that excessive amount of in-store inventory. And the ubiquity of the brands that it sells, I think, are trouble signs. The numbers that you quoted, I mean, they're pretty close. I mean, in terms of, they're both losses, and they're pretty close. So I think it's at the end of the day, it really is anyone's guess. But sure. I would give the edge to Nordstrom.
I'm with Carol on this one. I mean, what exactly is Macy's value proposition? Somebody explain it to me. Let's put it this way: if you pose the question this way, which of the two companies do you think has a shot at being out of business by the end of the year, Macy's or Nordstrom? I'm going to bet we would all say Macy's.
Well, we're going to have to do a follow-up by the end of the year to see if that estimation comes through. Folks, that's it for the Retail Ring. Congrats on your wins and, on your losses. We'll take them and do a little better next time. All right, let's jump into our final section, which we like to call In the News. Basically, I've got some more specific points that I want to toss your way. Basically, stories from within the broader landscape of reporting that really highlight some shifts in different industry trends. So let's start with this one. I'm curious y'all's thoughts on the retail workforce and how it fits into the future of the brick and mortar space. So though companies obviously took a hit, the workers may have felt the more precarious situation. So for some context, over the summer from the U.S. Bureau of Labor Statistics, We saw reporting that showed initial wave of unemployment put 1.9 million store-based retailers out of work, and analysts point to a permanent shrinking of said retail force. On top of that, the Washington Post released a major report that showed beyond just retail, more than half of the 50 most valuable companies in the U.S. turned a profit in 2020, while at the same time, those companies laid off thousands of workers, and that included a few retail companies like Walmart, Nike, and Warren Buffett's Berkshire Hathaway, which owns retailer Nebraska Furniture Mart. So if the brick and mortar continues to push towards being the experience arm of the retail strategy, do you think there's going to be more of an expectation for a precarious workforce to deliver that unforgettable in-store experience? And if so, how do you justify that to the workforce and create that buy-in from associates? If we just saw such a major downturn and a bleak outlook for that workforce, how do we then expect them to come back strong and deliver on what we see as the next phase of retail? Thoughts there?
Well, that's a really big question, and the role of technology can't be underestimated here too, because going into 2021 and beyond, the skill level for some of these store associates is going to have to be raised as well, because they're going to be working with a lot of technology. So going forward, it's going to be a question of sort of balancing that art and science piece of it. The good news is, there are a lot of younger generation folks who are interested in retail, and retail is still a very good career. But the bad news is that retailers are competing with, as retailers become technology platforms, they're competing with other technology platforms for talent. So this larger conversation of the talent wars and where that talent goes in the retail space, as broad as retail has become, I think is going to be the bigger challenge.
And what do you think the workforce can expect as retailers have adapted to the pandemic with leaner workforces? Do you think we're going to see more roles treated as seasonal? Is it going to be a continued leaner workforce? Do you think we're going to see a return of any of those brick and mortar roles, or will they adjust and shift? Thoughts there?
I think there were a lot of retailers who were talking through their hats, and I'm being polite about it, when they kept talking about their workers being essential. Some treated them that way. For some it was, but it was just lip service. But the problem is not just a pandemic problem. You've got a lot of retailers where they've got a customer service model, but their senior executives are rewarded based on how low they can drive their labor factor, and so there's a mismatch there. It doesn't work. And so the problem is, as long as retailers and especially senior executives are being rewarded based on how few people they can have in the store, as opposed to what the level of customer services that they're offering, it just doesn't. It's going to continue to create problems, and I think it's going to be the same thing going forward. And I think there are a lot of employees out there who justifiably, feel like, as being called essential was just a turn for the phrase to get them to come to work when they could get sick.
Yeah, I don't think it's a one size fits all. I mean, it's going to be based on the organization's strategy. So if they're looking for to create that type of experience, we just mentioned Nordstrom, and Adrian had shared how great that experience is in a Nordstrom location. I do think that like the minimum wage kind of pending increase will put pressure also on retailers. So more to come there. So I think we could see a natural impact there based on if that goes through. But it's really based on the organizational strategy. If you're a discount retailer, with low margins, you're probably going to have just a cashier. But if you're a company that's looking to drive brand experience, build out e-com, BOPUS, and you need those folks in your stores, then I see those coming back.
Yeah, that's a good point, because you look at the models that everybody's trying to emulate right now. Not everybody, but that are having an influence on the industry as a whole. Retailers like Aldi and dollar stores that flew under the radar for quite some time, and now everybody's looking at them and saying, "Wow, these highly efficient small boxes with the skeleton crews are perhaps the wave of the future. So retailers are finding ways to do more with less and not necessarily sacrifice the expectations that people have for their brand. But to Kyle's point, I mean, it depends. They're highly experiential retailers that can't afford to make those personnel cuts because their brand depends on that kind of level of service.
Interesting for me, though, also in grocery, I was in Whole Foods over the weekend, and there's an army of pickers in there, right? For either for curbside pickup or for delivery. I mean, there were more pickers than customers at one point. So maybe there is a shift in the type of role that retail employees will actually perform, and I think there's going to be, if you look at the sort of distribution model where a physical brick and mortar store can be used as a distribution hub, then you might have a larger back stock or a back office stock that is going to be permanently manned by pickers and packers. So I think there's going to be some additional jobs that will be created as the sort of the evolution of online on the omni-channel business develops.
It's a great point.
Yep. But the other thing that happens is that it depends on how you're going to define retail. And it's not the case in Whole Foods because they're doing it with Amazon, obviously. But you go to a lot of stores and you see a lot of pickers, and they don't work for the store; they work for Instacart. Mm-hmm. And retailers that are going down that particular rat hole, where they are outsourcing a significant and important part of the customer experience. They're doing it because it's a turnkey solution, and they're giving up their customer information and the shopper information, which will allow companies like Instacart, not just Instacart, DoorDash is doing the same thing, to actually become a competitor to them down the road. This is how little so many of these retailers actually value their brands. They're not thinking about the long term, and yet it's expensive to get into some of these parts of the business. But they are going down a road that is really dangerous because they are handing their potential competitor the keys to the car, and it's not going to be a pretty picture going forward.
All right, y'all. Unfortunately, that does it. We've reached the end of our show. I had some more stuff to get to, but we're hitting up on the hour, so we're going to have to do a continuation of this one. I want to thank all of our guests. Thank you so much for joining us, giving us your insights. I'll thank you all individually here, but before we completely wrap, I promised that we would be announcing the winner of a new Apple Watch if you stuck around. So we're going to be doing this for all of our roundtables. So if you missed out this time, just make sure to tune into the next one. But our winner for the new Apple Watch is Nicole Mazzola. Nicole Mazzola, we will be sending you an email from MarketScale. Yeah, woo! So we can get your mailing info, and we'll ship you that, obviously as a gift and token of appreciation for watching along. So again, Nicole Mazzola, keep an eye out for an email from MarketScale. All right, thank you again to our 4 guests. We've been chatting with Carol Speakerman, president of Speakerman Retail and host of MarketScale's Speakerman Speaks Retail. We had Adrian Thomas, president and CEO of Datascan, Kyle Freeman, VP of Customer Success with Vixo, and Kevin Coop, content guy for Morning News Beat. I'll give you all an opportunity here to share how people can find out more about you and your company. So we'll start with Carol. If folks want to get in touch with you, find some more Carol content, how can they do so?
SpeakermanRetail.com, Carol at SpeakermanRetail.com, and on Twitter at RetailExpert, XPERT.
Love it. All right, Adrian, if folks want to find out more about Datascan and some of the ways that you're innovating in the industry, how can they get in touch and learn more?
Info@datascan.com, or if anybody is interested in contacting me directly, it's adrian.thomas@datascan.com.
Fantastic. Thanks again, Adrian. Kyle Freeman, if folks want to learn more about Vixo, some of the ways that y'all are assisting in facilities management in the retail space, how can they do so?
Sure. Our website is Vixo.com, or you can email me directly at kyle.freeman@Vixo.com.
And last but not least, Kevin Coop, content guy for morningnewsbeat.com. Other than the given website, if folks want to find out more about you and some of your creative content, how can they do so?
Well, morningnewsbeat.com, and it's in its 20th year. KevinCoop.com is where you can find out more about me, or you can reach me at kc@morningnewsbeat.com.
Love it. Carol, Adrian, Kyle, and Kevin. I really appreciate it. Thank you all for your insights. This was a lot of fun. Looking forward to doing this again in the future. And for everyone watching, thank you for tuning in to MarketScale's live retail roundtable. We'll be back next week with a dive in to the quick service restaurant space. So you don't want to miss that. And then hospitality the week after. We've got content coming to you live. Till then, I'm Daniel Litwin, the voice of B2B, and we'll catch you next time live with MarketScale.